Hello and welcome. This is the FNO show. I am Agam Vakil, and in this show we take you through all that is happening in the futures and options space in Indian equity markets. For now, markets under pressure. The large part of that is on account of weakness in India's largest bank, HDFC Bank, which is also buckling under its quarterly earnings coming through. There hasn't been as much of a bad when it comes to its quarterly earnings, but the stock has taken a big knock of around 5% as we speak, and that's of course weighed on sentiment on markets across. So when you consider the bank, the Nifty specifically, let's pull up the constituents and take a look at what kind of contribution the Bank Nifty is weighing on. Okay, so that's as far as the Nifty and the Bank Nifty are concerned. Certainly a lot of caution for those who are longs in the markets. That's the word coming in from Dhwani Patel. Ajit, I'll come to you on the benchmarks as well. How are you assessing these trends now?
Yeah, good morning, Agam. So, Agam, a couple of things. That till yesterday, we were just seeing a pause after 4 days of advance, and today, with the kind of cut that we are seeing, plus now the follow-up move that we are seeing in the index after the initial decline. This indicates that the momentum that we were seeing in the market, that has faded away. And because we have re-entered into the zone 21,800 to 28,500 that we were trading it earlier, and we witnessed a breakout, and we made a high around 125. So with this, now we feel that's more of like consolidation again that might set in with the bias on the negative side. And since we are still holding above the 20 EMA, so the overall trend has not changed yet when it comes to the index. So 21,570 is the area basically where we have 20 EMA placed. So that area is a strong support. But yes, intraday, the way we are seeing selling pressure emerging at a higher level, any rebounds toward 21,850 could be the zone where one can look for fresh shorts, intraday shorts with 920 as a stop, and 21,650 to 600 being the target area. Similarly, for the banking index also, we feel that after the decline in SDFC, it's contributing roughly around 170 points in the overall decline in the index. So this close is going to be critical. If we close below 1600 mark in SDFC, then expect this pressure to extend further in banking index as well. As of now, 46,900 is what we are eyeing as a make or break level. A close below that would trigger further decline towards 46,600 to 46,300. 46,300 is something that we are eyeing as a crucial support now.
It does now look like there's further precipitation, and it seems like 47,000 is in the rear view mirror, at least a bit, because we've seen a sharp cut in the last 5 minutes on the Bank Nifty. As we speak now, it is currently at around 46,700 and is now down around 3%. So we are seeing a lot of selling pressure, and that's coming in on account in the last 5 minutes. So keep an eye on some of these levels, because this certainly does have a bearing on the entire sentiment of the markets. Well, needless to say, to both our experts, I want to talk about HDFC Bank. Ajit, your view now is, at least technically and based on the derivatives data that you are assessing, how are you viewing this one, and what would you do with HDFC Bank?
Yes, the opening below 1600 mark is definitely not a good opening, because we have opened below the major averages. So this is one big negative. And the last time when we had this kind of decline in September 2023, we had a decent phase of normal but yet gradual distribution in the stock. So again, it might 1530 is the immediate support that we have on the weekly charts, and below that again 1450. So broadly, if you see that again we have not made any progress when it comes to the price-wise move in the SDFC. It's still the upper band just around 1700 mark, which is tested shortly, and again now we are inching towards the lower band, which is around 1450. So broadly, this range will continue to play out, and as I said that there could be a marginal breather around 1530 area, but don't look for aggressive long until we reclaim 1600 mark if you are a short-term trader.
Okay. Dhwani, would you concur? Do you think that HDFC has increase in open interest? Let's start with those which are seeing an increase in positioning. So we will, of course, have a handful of counters. HDFC Bank is right at the top of that list, even as it moves down by 6.5% and 13% added in open interest towards shorts. SAIL is the other one, declining by about 3.7%, pardon me, and that's where we're seeing increase towards shorts. Kotak Mahindra Bank is losing out around 2.6%, and now that one also moves below the mark of 1,800 rupees per share. Are market participants casting a shadow on a whole host of other banks? That's the question, really. And we're seeing longs unwinding in Nalco, Bajaj Finance, Torrent, Pharma, along with Berger Paints. All of these counters are under pressure. The question is, what do we do with these stocks? Ajit, I'll come back to you on this one. Stock ideas that you have on your radar at the moment.
So among the names that you just shared, Kotak definitely looks weak to us, considering that SDFC and Kotak, they are among the underperformers within the private banking space, and we feel that this breakdown below 1800 mark now, plus it has slipped below the major averages, just in line with what we were seeing in SDFC, though the quantum is still less. We feel that the kind of attempt that we were seeing for recovery would subside again, and decline below 1780 might push the stock further lower towards 1720, 1700 levels. So this is one stock that one should look for shorting opportunities with 1820 as a stop. And other than that, we have two recommendations for the day. The first one on the list, we have TCS. So IT, the overhang of the results are over, and we feel that the kind of buoyancy that we are seeing in the IT pack, there is a possibility that TCS will continue to do well from the current level. So one can look for buying opportunity in TCS at current levels, with 38.55 being the stop and 4,010 as a target area. At the same time, we are seeing distribution breakdown in Ramco Cement. It's almost like 2 months of consolidation breakdown. So 940, 935 is what we are eyeing as the immediate target in Ramco, which will stop at 992.
Okay. Well, incidentally, Ramco is also on the radar of Dhwani. Dhwani, I believe there's Ramco and also Nalco. Can you tell us, can you take us through your views here?
Yes, absolutely. Ramco is also one of the counters that I have picked.